What is gross pay and how does overtime affect it? Have you ever looked at your paycheck and wondered what gross pay really means? Understanding gross pay is key to grasping your paycheck basics and components. Gross pay is the total amount you earn before any deductions like taxes or insurance are taken out. It includes your base salary or hourly wages, along with any extra earnings such as overtime pay, bonuses, commissions, tips, and paid time off. Essentially, gross pay gives you the full picture of what you earned during a pay period before anything is subtracted. Now, let's talk about overtime pay. Overtime pay is the extra money you earn for working more hours than your standard work week, which is usually over 40 hours. Under federal labor law, overtime is typically paid at 1.5 times your regular hourly rate. So, if you normally make $20 an hour, your overtime rate would be $30 an hour. This means that when you work overtime hours, your gross pay increases because those extra hours are compensated at a higher rate than your normal pay. It is important to note that overtime rules can vary by state. Some states have different standards for overtime pay, so be sure to check the laws in your area. Understanding how overtime affects your gross pay is essential for effective budgeting and financial planning. Knowing how much you can earn with overtime can help you estimate your total income more accurately. This way, you can plan your expenses, savings, and investments with a clearer view of your earning potential. To calculate your gross pay as an hourly worker, simply multiply the total hours you worked, including any overtime, by the appropriate pay rates. For your regular hours, use your base rate, and for your overtime hours, use the higher overtime rate. If you are a salaried employee, your gross pay is usually fixed for each pay period. However, if you qualify for overtime, those extra hours will increase your gross pay accordingly. Keep in mind that while overtime increases your gross pay, it may also push you into a higher tax bracket. This could affect your overall tax situation and benefits calculations. So, it is wise to consider these factors when budgeting. In summary, gross pay is your total earnings before deductions, and overtime pay increases your gross pay by compensating extra hours at a higher rate. Understanding these concepts helps you make informed decisions to manage your budget effectively.